What's up, everyone? In this video, we're going to be talking about what they don't tell you about stock market dips. Everyone hears the saying, buy low and sell high. Clearly, it's not that easy in real life, and a lot of people don't end up buying during stock market dips because they say, well, what if the stock market actually drops a lot lower, and what if I buy too high? But in this video, we're going to explain why you shouldn't even really worry about that and some other important things you need to know. So, Hunter, the stock market has had a wild year so far. Next week is going to be one of the biggest weeks of the year with a combination of gigantic stock earnings, Q2 GDP, and an FOMC interest rate decision. So, I still feel like a lot of people are kind of in the boat where they're like, you know what? Yeah, stocks are low, but what if it drops lower? And they're kind of like hesitant to buy in. So what is your response to people who might be feeling that way?
Well, I do agree that they could definitely fall more. A lot of stocks are still overvalued, but you never hear people worried about buying too high when the market's going up, even though the stock prices were way higher than they are now. Stocks have fallen like 40, like Apple was down, I don't know, like 30%. And people are like, oh, what if I buy too high? But when it was at 180, everybody was saying it's going to 300. So it's just these people get like the sentiment changes, and it's two extremes. It's never
right.
what is a fair value. It's if it's going up, there is no price too high, and if it's going down, every price is too high, and they're never going to be satisfied, and you're never going to time the bottom, unless you get extremely lucky, and then you might think you're going to do it the next time, and you're not going to. So it would be better if you didn't time the bottom, and it would be better if you didn't get lucky and time the bottom, because it's just going to make like a bad habit for the future.
Yeah, and I'm actually very glad you brought that up, because I feel like we don't talk about that too much, in the sense that, when stocks are breaking out and blasting past all-time highs, you have a different sentiment out there. Like, people are like, I have to buy in before it rises a lot more, right? And there's like a fear of missing out. Where, on the other hand, when stocks are dropping, when you really should be like kind of rushing to buy in, people are more like, I don't want to buy in yet because I'm scared. Like, what if it drops lower? So I feel like that's very interesting how human emotion kind of makes people do the illogical thing in the stock market.
Yeah, that's why most people never outperform the market. Even hedge fund managers or whatever, the mutual fund managers, they don't outperform the market. And a lot of it has to do with, number one, they're stupid, and number two, their clients, if in like bull markets, they would have the last 2 years, they would have been like, why are you not having Coinbase and Roku and all these stocks in your portfolio? They're up so much. And then, oh, I'm gonna fire you or whatever, I don't know, like financial advisor stuff. And then they put those in their portfolios, and obviously they're extremely overvalued. Something like this happens, they're down 90%.
Yeah.
And now they lost they erased all of the gains that they might have had, plus they charge the fee still. It's not like they scrap the fee when they're sucking. So
right,
just terrible. So human emotions, probably you just have to try to remove all of your emotion and just think like logically when you're investing. And it's hard for a lot of people to do because it's your money. And seeing money, like your money that you worked hard for, go down, it does not feel good. But if you know what you're investing in, which most people don't, they just buy a company because they think it's cool. But if you know what you're investing in and you see it go down, and you can like look at the company again and see, okay, did I miss something? And if you did miss something, then you might have to sell. But it's better to know than to just be guessing, and then you never it's just you're not in as good of a position if you have no idea what you're investing in. You're just buying it because of the name.
Yeah. And I feel like, obviously no one knows if the stock market has bottomed. No one can time it perfectly, not even Warren Buffett. But I also think it's interesting and probably beneficial to think about it like this. Even if the stock market's not at a bottom and you buy high, you can always dollar cost average, but think about it this way. Let's say the stock market dropped by 20, 30, maybe 40% and you don't buy in because you think it might drop lower. You can't time the market anyways, but if you don't buy in, there's a good chance that the stock market never returns to that level in the future. If we look at it, a very extreme example from 2009, the S&P 500 was at $700. Today it's at $3,900, and it had an all-time high of $4,800. The S&P 500 honestly never even got close to $700 again after 2009. And I know that's an extreme example, but the main point is that if you wait on the sidelines with the fear or, the possibility of the stock market possibly going lower, there's a good chance you can miss that opportunity that you'll never have again, ever in the future with the S&P 500, or you'll just have to wait however many years for another big dip, because historically speaking, significant stock market crashes and dips are far and few between.
Yeah, and in 2009 and 2008, when the market was crashing super hard, what you would have heard from everybody is that stocks are the worst investment ever. And that's a pretty good signal, at least to me, that they're a good investment. Same with real estate. They're like, this is horrible. And it was the best time. Yeah. It was the best time. Mm-hmm. And so when everybody else is saying that this is the worst thing ever, then you might want to get interested. And when everybody's saying something's the best thing ever, you might want to not ever touch it until they think it's the worst thing ever. Because they are wrong. It's just through history, the majority of people have been wrong when it comes to investing. So why would you follow the majority of people? It just doesn't make sense. You're not. Yeah. It's just not going to work out over the long run.
Yeah, exactly. And as a recent example, we could use some of these cryptos. Over the past couple years, everyone's been saying, if you don't have X percentage of your money in crypto, you're going to be poor. I mean, that's an extreme example, but the main thing is everyone's saying buy crypto, buy crypto, buy crypto, buy NFTs, buy whatever with crypto, and look what happened, And as another example, I want to say in, 2019 or 2018, Bitcoin was at, 3,000, or it was only a couple $1,000s, and at the same time, everyone was saying Bitcoin sucks now, So it's you see what the crowd's doing, do the exact opposite. Over the long run, as long as you're doing that with, solid investments, should be pretty good.
Yeah, I would say maybe a month or two ago, in one of the videos I said that 99% of cryptos are scams, or anything involved with cryptos is a scam. No hate comments, not a single one. If I said that last year, dude, there would have been an entire, platoon of NFT profile picture freaks coming after me, but nobody cared because a week later 3 of the hedge fund, the biggest crypto funds, went bankrupt. So they're almost all of them are scams. Some of them are on the run, the founders of some of the crypto funds.
The hedge funds. Yeah.
It's dude, this is a video game. It's ridiculous. It's the plot of a movie. And it will be. It probably will be. I think it'll be a movie.
Yeah.
It'll be good, I can see it. I'll watch it.
Yeah. So one other thing I wanted to point out is that, generally speaking, in stock market dips and declines, or even other market crashes, whether it's the housing market, cryptocurrency, anything, when you see those scary headlines, kind of like what Hunter already said, it's probably a good buying signal. I feel a lot of times those scary headlines, this chart is leading us to believe that the stock market is only 15% of the way done with its selling pressure. Wait until 2024 for the ultimate buying opportunity. I feel it just scares a lot of people out. So kind of ignore that and maybe even inverse those news articles. And one other thing I wanted to highlight is During stock market dips, that's actually when you see some of the biggest green days ever, because you just have more volatility overall. So if the stock market is down 7% this week, naturally there's more volatility. So that means that the red days will be bigger than ever before, but so will the green days. This week, I couldn't even tell you how many stocks are up over 10% minimum. You know, some of these stocks were up 12% in one day, like these growth plays. So understand that there's gonna be more volatility, and there's more there's bigger green days during stock market dips than basically any other time.
Yeah, and the market overreacts to news in both directions, like significantly more during stock market dips. Like any piece of news that normally would make like no difference will just catapult it into like the opposite direction. Like yesterday the market was falling, Biden got COVID, market rate up. So which that probably would have happened if we weren't in a volatile market, but but things like that happen. Like it could just be a little piece of news that you wouldn't think would really make that big of a difference, and it just makes a huge difference on days like that, and it's irrational, and then it sucks people in either direction. They'll miss a green day that's like up 4% or whatever, and they'll buy in, and then the next day it's down 8%, and then they're just trying to trade in and out, and they just get screwed. But if you're buying if you are buying truly undervalued companies, like you did the research and they're truly, it doesn't matter what the market's doing. It doesn't matter about anything really. If you made conservative assumptions, in the long run, you're gonna be fine. So Buffett's buying almost all of the greatest investors ever are buying right now and have been, but the difference is they're buying undervalued companies and they're not buying all these hype stocks that are still overvalued even though they fell 60%.
Exactly. So stock market dips are opportunities. Don't get baited in by crazy, scary news articles, and remember that even if it's not the bottom, it's probably a good idea to start buying in, because you can always buy lower, and as long as you're buying good companies, you should do pretty great over the long term. But I hope you guys like this video. If you guys want us to cover any specific topics, let us know in the comments down below. Hunter and myself are definitely open to any video ideas that you want to do, so let us know, and we might make them. So if you like the video, make sure to subscribe. Also, if you're looking to help find, or if you're looking to help analyze stocks that might be undervalued, check out that first link down below in the description and the comments. It's a stock analysis dashboard tool. Hunter and I made it. It is absolutely awesome. You can calculate your own price targets for any stock you want and look at all the important data metrics that you need to look at while investing. So definitely check it out. You can cancel it at any time, and it's an awesome tool. Besides that, have an amazing weekend.